It's interesting, isn't it, this idea that when we get to the end of this coronavirus outbreak, that some pretty fundamental consumer shopping patterns may be changed?
That's quite right. Before, penetration of grocery delivery in China was quite limited. However, after the outbreak of the coronavirus, we've seen anywhere between a doubling to a 6 times increase in terms of the number of users, downloads, and also deliveries coming from these apps. And as you said, it may very well change Chinese consumer behavior going forward.
But of course, this fresh delivery, food delivery, the delivery business is a pretty low margin business, right? So even if it makes sense for those large players, how will startups stay in business?
That's a great question, and it's a question that remains unanswered. China's food delivery, whether it's fresh grocery or whether it's food delivery sector, has been around for 10 years. During that time, the statistics tell us that there's around 88% of startups that are losing money in this area. And you're quite right in saying that this is a very low margin business. And so you've only got 3 hopes if you're a startup. The first is to be bought out by a larger player. The second is to live with those poor unit economics. And the third is to build out some kind of service ecosystem where you can cross-sell higher margin products across and be able to make some of that money back.
If this continues on for longer, and if there is greater demand even after the epidemic fears subside, do all of these businesses have the scale to be able to meet demand?
That's a great question. What we've seen so far is we've seen 2 acute pain points. One is around driver shortages, especially around the Chinese New Year period, where most of the drivers went home. And because of the virus's outbreak, they were unable to come back at a time that was most advantageous for the platforms. That's the first issue. The second issue is around inventory pressures. So some of the panic buying that we've seen in the supermarkets also extends to these online platforms, with consumers getting up at 4 a.m. or 5 a.m. to be able to have a driver assigned to them. So over the short term, those 2 issues continue to put strain on the sector, as well as the broader economics of the sector that we talked about earlier.
Michael, will venture capital funding be a problem? Because, of course, people really can't leave their homes because of the outbreak. They're stuck. And we have seen that for some of those projects, you really need on-site due diligence.
Indeed, indeed. And so when it comes to the venture capital outlook over the next few months, the guidance that we've received in terms of our interviews is that there won't be any significant fundraising activities for the next 3 months for some of the reasons that you described. One is that venture capitalists, especially those who are already invested in these food and grocery delivery startups, want to see whether or not their retention and the basket size issues are able to see improvement following the virus. And the other issue is, as you said, a simple matter of due diligence, getting boots on the ground to be able to observe drivers and consumers in place.